people who are in debt? Like, what are some simple steps that they can then take action to help get them out of debt?
We have quite a lot of people coming to see us going, I earn good money, I should be saving. And often I say to my clients, do you want more things? Do you need more things? Does that make you happy?
What's one piece of action all of us can take to improve our own financial literacy or financial outcomes? Today we have Shula Newland joining us from Full Balance Financial Coaching, and she has been doing this for over 2 decades, helping people get on top of their finances. And today we're going to figure out how we can do exactly that as well. So thank you for joining us.
No worries, it's great to be here.
What do you enjoy about this space to do it for so long?
Well, using my special skills to help people, really.
Yeah.
I mean, that's what it's all about. Yeah, and it's a bit of an art. It's like putting a jigsaw together and coming out with best plan for someone.
Yeah, nice. So 2 decades you've been doing this. So financial coaching is the space?
Yes, that's right. It's emerging. I mean, it's been in America for a while. You've got Dave Ramsey over there with an empire. Yeah.
Yeah.
Doing it, yeah.
And how did you get into this space?
Well, I was just helping a friend who was complaining about that they were getting screwed over about this loan on a car they got, and then I was like, what are you talking about? You've been working for ages,
Yeah.
And so that's where I was like, oh, this is my skill. This is what I can help people with, because I always wanted to start my own business, so I could follow my ideas, and I just started from scratch.
Nice.
Yeah.
So it starts by helping somebody who needs a hand. And then, so do you need, back 20 years ago when you get going, do you need like specific qualifications, or is like some sort of certification, et cetera, compared to what it looks like now for people to get into this space?
Yeah, well, I started from scratch. I was practicing on my friends. And then I went on a little OE, and that's when I kind of decided, no, this is what I want to do. So I started looking into studying for it, and I had my English passport, so I was actually looking at whether there was study in the UK for it. But New Zealand had a perfectly good qualification, and that's the Graduate Diploma in Business Studies in Personal Financial Planning. So and you learn the fundamental of financial planning, which isn't selling products when you're looking at the fundamentals of it. Yeah.
Which is a lot different to, selling insurance, mortgages, whatever basically is what you're saying, right? Which is probably the path that a lot of people go down in terms of the finance sector.
Yes, well, because the definition of a financial advisor under the Act is someone that's giving an opinion on a product.
Ah, I see.
Yes, and the Act is there to protect people because they're getting paid a commission on that product, and so we need to, the legislation ensures that the people are acting in the client's best interest rather than selling them a product so they can get a commission.
Got you.
So with financial coaching, it's independent, so there's no sales of products involved. It's all about the client. What are their goals? How do we get to their goals? Yeah.
Okay, so if we fast forward to today in terms of what you do, like what does a day-to-day look like for a financial coach such as yourself who's been doing it for a decent amount of time?
Yeah. So most of our clients come through EAP, Employee Assistance Program. So often they don't actually know who they're coming to see. I don't know why they're coming to see me. We pick up the phone and we go, hey, or see them on the video and go, hey, you've come to get some help with your finances. Is that because you want to plan for something, or are you struggling at the moment? And off we go.
Wow.
Yeah.
And what are you seeing in 2025? Like, what are you seeing at the moment? What's the common theme that people get in touch about?
Yeah, well, I mean, we're at a particular part in the economic cycle, and I think sometimes people forget that this is a normal part of an economic cycle. So where we're at is we're coming out of the end of a bad patch, which is typically when you get a lot of redundancies. So we're seeing redundancies coming through. We're seeing a lot of separations at this time of year. You've come through Christmas. A lot of people separating. You're coming up to today is the end of the financial year, and so we've got more inquiries from small business owners realising they need to get their tax and their shit sorted.
Yeah.
With that, so it's a variety of reasons that people come to see us, and we're using fundamental processes, and it's just different pieces of the jigsaw that are more important for different clients. Yeah.
Yeah. Okay. And so for these people to get in touch with you, did they kind of identify in themselves that something's not quite right, and then they start looking for solutions, and then they find out that their employer is a part of the EAP framework, and then they reach out via whatever channel the employer offers, and then they end up on that Zoom call with you? Is that basically the path?
Well, they can find us through Google. If you're Googling us, you'll find us. We don't do a lot of advertising at this stage. And with the EAP, unfortunately, a lot of people aren't aware that they can access the financial through EAP. It's most well known for the counselling side of it, and it's a very small part of their business as well.
What the counselling is?
No, the financial. I think it's only like 3% of their business.
Oh, it's a small part of the EAP?
Yeah.
Gotcha. Yeah.
Yeah,
Okay.
yeah. So there's a lot of scope to improve the awareness that financial coaching is out there. And it can help people. Yeah.
So people probably don't know inside of an organisation that EAP does cover this, and or does some employers not offer the financial side of it?
No, they all offer the financial. It's just they offer. I mean, EAP actually offers quite a lot of different things as well in terms of legal, career coaching, and it's evolving as well, the EAP business model. It's just they often might not find out until someone's actually come in and spoken out their place of employment about it.
Gotcha.
Yeah.
Okay, let's go 2 scenarios then. So one, somebody gets in touch and they say it's redundancy. Are they just finding out that they're going to be made redundant, or is it this could be an outcome? And then what do you normally help them with in that situation?
Well, for redundancy, often people are panicking. They go, oh, God, what now? I always say, look at the positives of it, prepare for the worst but expect the best, because, there's a high probability you are going to get another job and you'll be fine.
Yeah.
And often if there's a redundancy payout, then that's going to, get them through a few months. And then often we might be doing is looking at, okay, what's the minimum wage salary you can get? If you can't get your wage that you're getting at the moment, if you had to accept a lower wage job, could you survive off that?
Yeah.
So because once we've got our baseline figures, we can then plan for anything from the future, any scenario. So yeah.
Okay, and so that's then you're getting into, okay, what outgoings do you have, etc., based on, what they currently have?
Yeah, so we're looking at their financial statement, which is quite a comprehensive net worth. We're valuing how much their cars are worth, and then we're looking at how they spend their money at the moment, and in quite a lot of detail, probably more detail than most would go through.
Yeah.
And then once we've verified that is actually reflecting reality, because anyone can do a budget, throw together some figures. It doesn't mean it's going to reflect reality. Then we've got that baseline data, and we can then go and project for the future. Okay. Yeah, whatever it is. Yeah.
Does this happen as a one-off session, or is it ongoing? Or because there's a fair bit of work there, right?
Yeah, there's a fair bit of work. I've fine-tuned the process, so we can collect all that information in an hour and a bit.
Yeah, before the session, is it?
No, we do it right there with the client.
Nice.
We gather it all in one day, in one session. Yeah.
Nice.
Yeah.
Okay, so because you need that to make sure it's accurate to ensure that they're not missing anything. And then do you start making recommendations or suggestions as to what's next for them to try and decrease that worry? Is that what we're trying to achieve on that call?
For the redundancy?
Yeah.
Well, it's the same process, no matter what reason they're coming for us. To see us. So once we've got that baseline data, we can then do anything for the future. So, saving for a house, they're expecting a baby, they're separating, or just to, get a nice surplus so they pay down debt quickly, save for a house. You know, it's and we can project all that out. And so we want the numbers to work, right? Yeah. And then we're looking at the behaviour as well. Because if you just look at the behaviour or motivating someone, yes, that might work. But if the numbers, you know, we want to have that light. We know that there's a light at the end of the tunnel. We know we can get you out of this hole. Yeah. Or whatever situation it is. Yeah.
Do you find, like, what would the split be between people who are reaching out going, hey, my situation's pretty good, I want to like aim for more, versus I'm in the shit, I need help? What would that split be, do you think?
Maybe 20% wanting to do better, because I mean, there's a reason they're picking up the phone. Yeah. It's because they're under stress. Something's going on in their life that's causing them to reach out. Yeah. You know, like I said, we're not trying to convince people to use our services. Yeah. And sell them into something. So people are generally reaching out and looking for us.
Why do you think that? Like, why do you think it's an 80-20 split that way? Like, is that psychology where we wait for pain to then seek change, but then you've got a subsection of people that are just like, okay, like, I'm driven, I want more, like, give me the information. Why is it that way around?
Well, so you've got different money personalities, for starters. Like, everything starts with the money personality. That's going to be the hugest dictator of how you end up being with your money. So a certain portion of the population are going to be good with their money. They're a hoarder, a masser personality probably. And then the opposite end of the spectrum is you've got your spender avoider personality. So they are basically, they're spending their money, they're enjoying living in the now, but they're not thinking about money or planning for money. So they're living a pretty good life, but if they're living off debt, it then will get to a point where it starts snowballing and they're under a lot of stress. Yeah.
And does that money personality kind of take them down a path where they think that what they're doing is just very much them, it's normal, but then they get to a dead end in the cul-de-sac or a breaking point and go, shit, okay, something's got to change here, and I don't really know what it is.
Yeah, they can live for that for quite a long time before they get in the poo. And I guess it's also wanting a different outcome. If you're wanting a different outcome from what you're doing, like often people might come and see us when something good has happened. They've got a new job, they've got a pay rise, and they're like, I want to make sure I use this pay rise.
Nice.
Yeah.
Yeah. Okay, then so scenario 2, somebody is in debt that you referenced before. What can people who are in debt, like what are some simple steps that they can then take action to help get them out of debt?
I think the biggest, I'm actually going to take a step back and I say the biggest thing with people in debt is there's a lot of like stuff in the media saying you should pay your credit card down, don't pay interest and blah, blah, blah. And then they put too much pressure on themselves to pay the debt down without creating the good habits. Gotcha. So in order to break the debt cycle, you've got to create a savings habit.
Nice.
Yeah. So for my clients, I will start off with saying, so we need them to stop. So what people often do is put all their money on the credit card to pay it off, and then that's all going, oh, I paid off my credit card, I'm being good. Yeah. And then something crops up, they don't have savings, and they go and use the credit card again. So they're in that cycle and behaviour of just using the credit card because it's easy. So to stop them doing that, we get them just to set up an automatic payment for the minimum of the credit card. And I say just forget about that credit card. It'll just be going down in the end. Let's focus on creating those habits first. And then once we've actually got a surplus in your budget, that can go down to paying the credit card off quicker.
So is it like an automatic payment against it, but then stop using it? And so then we're kind of treating it like a loan. Then let's go focus on habits plus then the budget and then start to pay it down even faster?
Yeah, just forget about it. Put it in a drawer and
be done with it, yeah.
Forget about it, yeah.
But how do you get on with all the people that tell you no, that, you know, credit card's amazing though, it's great for my credit score, it's great for the air points, and I've got 60 days and like all the marketing machine that tells hundreds of thousands of people to have them.
Yeah, so again, that comes back to spending your money personality and whether it suits your money personality. I mean, it's like the same with a revolving credit on a mortgage.
Yeah.
So, yeah, what I say to people is, how much rewards are you actually getting a year off that? Is it like maybe a few $100s? Is that really worth it? Because with that credit card, it takes away your transparency because you're spending on a different account. You've got it delayed, payments delayed as well. So are those points worth it for it taking away your transparency of your money?
Yeah. I guess, if I were, and I was, like in credit card debt, I think you start to identify that even if there are these rewards and these benefits, deep down, like, I can't even be a part of this at the moment. Like, well, I'm just, tempting fate. Whereas then you've got people who have probably claim that they've never, paid interest on a credit card and they pay it back on time every time, and it's amazing. I'm using the market's, the market's money against them and all this sort of stuff. Probably two very different personalities, right?
Yeah. I mean, if you're a hoarder personality, if you want to keep using it, by all means. But in terms of, because we have a system that we get people on, so the credit cards, you can't use a credit card when you're using our system. It's a pain, really.
Yeah. Getting in the Kiwi Saver fund that suits you and your situation is key to making sure you're maximising your investment. Generate are an award-winning Kiwi Saver provider with a track record of long-term performance, and they can help you do exactly this. Their advisors can meet with you to talk about all your options when it comes to Kiwi Saver to help you decide what's best for you. Too many people never get Kiwi Saver advice, but not you. Go to generatekiwisaver.co.nz/change to book a no-obligation chat with a Generate advisor. A copy of the product disclosure statement is available at generatekiwisaver.co.nz. The issuer of the scheme is Generate Investment Management Limited, and of course, past performance does not guarantee future returns. Talk us through the system. So is that like a methodology or?
Yeah, so it's just a set up for your bank account system so that you are putting aside that's creating that savings habit. So in your income and expenses, you will have expenses that are only coming up, they're not coming up monthly, right? So, your car maintenance, your house maintenance, your holidays, Christmas, school fees, all those things come up. See, if you're not putting that aside, you're actually going backwards. And that's what a lot of people don't realise. They think they're fine. But if you can't put that aside, and it's usually a fair bit of money, it could be $100 a week, then you're actually going backwards, but they don't realise it.
Yeah.
And also what we see is people don't realise they're on the edge of the cliff. They don't realise it. Then something pushes them over and they come and see us. And they think the thing that's pushed them over has put them in the bad position. But I'm like, no, you're in a bad position already. Something's just pushed you over the cliff and you come to see us. So a lot of people are it's that avoider personality, that spender avoider, So they can be in quite bad financial situations, but not stressed at all about it.
That would be massively confronting for a lot of people, I think, because that's probably then when we do lean on the credit or some sort of finance solution to ensure that the thing that has tipped us over the edge, we go, well, like, how was I supposed to know my roof would cost $4,000 to fix?
Yeah.
Who's putting $4,000 aside? Or quite often I'll see the argument against an emergency fund, like basically, well, people don't have one because they don't have anything left in their budget to do that, which I understand. However, from your side, you've got to then, that to me now looks like more of a mindset the more I've tried to understand this space.
Well, there are actually two different types of savings. So one is your what we call your kind of yearly costs. So they're all that's in your income and expense statement. So your roof repair isn't.
Yeah.
So that's more of a one-off expense. How am I going to pay for that? Now, so that's the next level because I have what I call the ladder to financial security, and so the first rung of the ladder is can you actually keep up with all your bills? the second rung of the ladder is, are you putting this yearly cost aside? Then the third rung of the ladder is, can you pay your debt down, your high interest debt down quicker? And then we're looking at emergency savings.
Gotcha.
Yeah, so not everyone has the luxury of being able to have those emergency savings. And that's just the reality. Yeah.
So we try and keep going up the ladder to sort those things, and then like ideally, but I'd imagine that like that's possible to get up the ladder, right? But do we try to jump from step 1 to step 5? Or when people read that, oh, hey, have an emergency fund in that situation, they're like, well, I'm at step 1. Don't talk to me about, solution 5.
Yeah, so it's like I said, people trying to pay their debt down quicker when they haven't actually got the savings going on for the yearly costs. So then they end up just going around in circles down here.
Yeah.
Yeah.
Okay. Yeah. Geez, it is. And how does one find out their money personality?
There's a quiz on my website.
Yeah.
Yeah.
Okay.
I get a lot of people using it from all over the world.
Yeah. How many are there? Is there 4 or?
So the hoarder, the spender. Do you want me to describe each one? Briefly.
I think people can go through and have a crack at it if they want, but
So the hoarder is someone that's driven by security and savings. The spender is someone that's just enjoying life and spending money. The next one is the money monk, and they are quite a giving person with money. They're happy if all their immediate needs are met, and then they're happy to give it away. And then there's the voider, who doesn't really think or plan about it. And then there's the amasser that wants to take risk and make their money grow.
Gotcha. Yeah. And why do you think we don't learn to identify which of those we are? Like, how is that not common for us to learn at a younger age or once we start getting money?
Well, I guess it's about any money, any personality really. At work they'll put you on these personal development things, and you'll learn what communications you are and things like that. Yeah. So it's just,
if people aren't doing it, then they're not going to learn it.
No, and your partner. So in a relationship, knowing what your partner's personality is and understanding, because it's your natural personality. It's not something that, you should be a certain personality. It's just the personality you're born with and is influenced with your upbringing and life and everything. Yeah.
I find that when we learn more about ourselves, it becomes like things get a bit easier and people are actually really interested in it too. So I guess probably the avoider is the personality that's probably never going to do that test or
Yeah, potentially. I've never thought of it that way. Well, some people overthink the test too much, and then the answers come out wrong. But
they're trying to game the system.
Yeah.
Okay, so if they want to do that on your website, like where do they go to? So do they search, full balance financial coaching?
Well, money personality, Shula or full balance. Yeah, so there's it in the top right-hand corner of the website. There's a link there. Yeah.
Okay, cool. I want to take us to people who are earning good money because a lot of people listening to this do and are aspiring to more. But I saw you recently say that having a higher income doesn't mean much anymore. It's about how much you keep, not just what you earn, which sounds simple, but what's behind that from what you're seeing with people earning more money?
So we have quite a lot of people coming to see us going, I earn good money, I should be saving. And I think it's, a common, money personalities obviously always comes into it, but also just not having a plan, not having a goal, not thinking about it. And you've got the mortgages are obviously a lot higher than they were. And when you earn more money, if you're a spender personality, you just spend more money. So it doesn't actually it's not necessarily going to make a difference.
Yeah, okay.
Yeah.
Have you noticed anything change over the 2 decades you've been doing this where now that we have access to Uber Eats and online shopping and all of these things that it's become even more normal to just spend through everything and, even our phones cost a couple of grand these days as an example?
Yeah, look, I think there's always going to be businesses evolving that are going to find ways to take your money.
Yeah.
It's just what happens. Whenever businesses can make money from people easily, they're going to do it. And, that's why we need rules around it as well. And that's why we have the Credits Contract Act and affordable lending. And that's one thing that could have made a big difference to New Zealand and the poverty in New Zealand, but unfortunately it hasn't.
Yeah. So, because I heard you say once that poverty in New Zealand comes from loans.
Yeah. I don't believe we need child poverty in New Zealand.
Yeah.
We have a robust benefit system, unlike some other countries. And usually, if someone's living in poverty, it's because they've got debt and they've potentially been given that debt when they couldn't afford it. It's a huge issue that is causing immense social issues. But, they put the Credits Contract Act in, and because it included mortgages, this became a very political issue. How dare we scrutinise how people spend their money when they're going for a mortgage?
Gotcha.
So it became a huge issue. It's on the news, but they're all talking about mortgages. They weren't talking about why the legislation was there in the first place, which was to protect borrowers. So they weren't put into financial positions where they are in hardship. Because when the traditional way of assessing a loan affordability is to, just take account of your basic costs. Oh, you're right, you can afford your basic costs. That's all right.
Yeah.
And then you can afford the car loan. As long as you just stop having those takeaways. Stop, your kids' sport. Stop doing anything else. Just live a basic life. You can afford this loan.
Gotcha. But of course, people don't do that. They want their kids to play sport. They have to pay for uniforms, etc. And then but they're eligible for the debt. So is that what you're saying? So then we give these people finance when really they're not going to change their life, or like who's going to live like that?
Because you've got two working people. They're not going to not buy takeaways for dinner.
Yeah. Or get the uniform, or send their kids to school camp or whatever. So then they are technically eligible for the debt, and then inevitably they'll end up getting behind on it. And then we wonder how they got,
Yeah, and it puts them into poverty. I mean, we see people that have got really good incomes, but they're in poverty because of all these loans. And, it was on the news last night about all the food parcels that are being given out.
Yeah.
And there's a lot of money that's going to helping people that are in poverty, but a lot of that money is then going back to all these loan companies. Because what are they paying ahead of food? Food is your number one priority. What are they prioritising above that? And that's what happens is people will pay their bills, and what's left will be for the food. And that's why people end up with so many health issues. You've got financial stress and a bad diet.
Recipe for disaster. Yeah, you're getting attacked from both angles, because it's not only just like what you're feeding yourself, but then up here as well.
Yeah. So, and there's a huge correlation between poverty and crime. So I really think that legislation needs to do the job, and it needs to be enforced.
Yeah. Okay, so then ideally that legislation doesn't allow that person to get access to that finance. But the argument would be, well, now how does that person get to work because they don't have a vehicle, or why don't they get to buy things that other people do, just because you think that that's going to solve poverty? I could see how very easy there'd be a case for we don't, no. Where people would probably overrule it and find a way.
And the other thing is, they want to give these loans out because it's what keeps the economy going. It's what keeps people in business. One thing is, if you need a car to get to work and you can't afford a car loan, then you can get money out of KiwiSaver under hardship for a car. Okay. So there is other avenues and options.
Yeah. And people probably don't learn about that, so then they gravitate to what the simple solution is, which is probably, you can afford this finance, it's only 19% interest, and you'll be fine.
Yeah, and I think the other thing is like I mentioned to you before, is you assume that people are making rational decisions. So why are they signing up for a car loan that they can't afford? Because I did a lot of research into this, and people going for car loans, very few of them are saving money before getting that loan.
Yeah.
So that means in order to afford the car loan, they have to make adjustments.
So by the time they get to the car yard, they're probably leaning on the emotional side as well, but then rationalising that it's that it's still a good decision.
Well, no. I think a certain portion of the population don't think rationally with their finances. We assume that people think rationally with their finances, but not everyone does. It's and that's why you need the legislation there to protect the borrowers and to protect New Zealand's well-being.
Yeah, and I think that's what makes this space fascinating, probably for everybody looking into it, because you've got some people who are very rational or then have a different money personality, and then we look at somebody else's situation and you're like, how could they let that happen? Like, whose responsibility is that? What were they thinking? But in their mind, they're probably like, what do you mean? Like, I've done absolutely nothing wrong here, but they're not going to see it how...
The lender's doing nothing wrong.
Well, even, like there'll be stories on social media or in the news about somebody's financial situation, and everybody will have, a bit of, I feel sorry for them. We're like, well, no, why would you feel sorry? That they've clearly made those decisions. And so we're all looking at these things from a different lens and personality.
Yeah. And so where do we have the baseline?
Yeah. Okay. What about then the rise of buy now, pay later, which you would have seen come through? And I saw the other day that 940,000 people now have buy now, pay later, which just blew me away. Average age is 36. Average age of a credit card is 55, I think.
Yeah.
And so it's a lot of the younger people. They, much like credit cards where it's like, okay, I get the rewards and whatnot. I'm been in the system, even though MasterCard and whatnot have got the biggest buildings in the country or in the world and these massive budgets. Like, where did that money come from? But people believe that it's great for budgeting and it's actually really helpful and it's interest free and that it's amazing. So I can see...
Who are these people?
Well, there's 940,000 of them, and 42% of them, Shula, they've got 2 or multiple accounts.
I mean, I've seen clients that could have 10, 15 payments coming out at once. Look, buy now, pay later is just, the industry will continue to evolve.
Yeah.
One gets shut down by legislation, and another industry will open up where there's a business case for it.
Yeah.
So, I mean, I think in Australia they've got, where you can get a loan from your pay early.
Yes.
And, they're like, oh, this is stopping everyone going to the loan sharks. We're doing them a favour. And look, if you are lending any money to anyone because they can't afford to pay it, you are not helping that person. And that goes for friends and family as well. We see that in friends and family. You're lending money to someone who can't afford it. So they couldn't afford to keep up with their costs. And now they've got to pay you back as well. So it's the same with buy now, pay later. It's the fact that you're borrowing money because you can't afford to pay for something is a worry. Yeah. And it's very disruptive to being able to budget buy now, pay later. It's the biggest thing is that it's actually disruptive.
What do you mean by it's disruptive?
Well, because you've got these big payments coming out. Moderate. They're not as big as they would have been as a one-off one, but now you've got these payments coming out. So you've got to wait for them to run out. And then in the meantime, that's coming out, so you run out of money, so you go get another buy now, pay later, and the cycle goes on and on and on.
So, to me, like, that seems so easy to be like, okay, I need to stop doing that, I need to change the behaviour. But again, like, that's me probably thinking rationally, which, like you said, people aren't. But it just blows me away they've done such a good job to, because it's nearly 1 in 3 people between 18 to 65.
Yeah.
To sort of convince them that, and I hear people say, oh, it's not credit, it's a form of payment. I'm like, sorry, what? In my accounting brain, and I'm interested in this space, I'm like, no, it's still debt. And they're like, no, it's not. They've just given me extra weeks to pay it off. I'm like, no, you've committed your future self to paying back your current self's decisions. But the marketing machine is so strong that they don't see it as credit, they see it as a form of payment. Yeah,
and the other thing is it's a bit of a mind trick too, because people don't think of it, oh, that's $300. They think of it as, a smaller payment coming out. So it's a bit of a mind game because it just seems better.
Yeah. Well, there's a saying in business, and it's like, don't solve it at the price, solve it at the payment level. So basically what that means is don't discount the price, allow them to pay it off over time. And part of that's psychologically, like even in my space in accounting, people started getting sick of, once a year we get this massive bill from our accountant. And
Yeah.
it's become this massive frustration. They're like, oh, okay, we need to do something about this. Okay, well, let's smooth it out over 12 months. And it's kind of almost the norm. But you'll still talk to people and their accountant will do it that way where it's a lump sum and they're like pissed off that once a year they've got to try and find $5 or $6 grand or whatever. And probably, you know, going back to what we were talking about before, if they're not budgeting for that, all of a sudden you've got to come up with that. So yeah, it's pretty genius, the whole, because I mean, when I was growing up, there was lay-by, but it was a little bit different. You would buy the goods, you would get the dopamine rush of like, okay, cool, I'm going to get this. And I would, you know, remember we would go to the warehouse to like pick up the thing that mum had put on lay-by, but you know, we'd kind of, you know, knew that we were going to have it for 6 weeks prior, or people would be lay-buying right up until Christmas and then collect it all then. But it was a bit different they've kind of flipped the whole thing where it's like, okay, you can have it now and then pay us back.
Yes, yeah. I mean, what we're seeing is that people are learning their lesson, but it's taking a year or two of using buy now, pay later before they go, yeah, no, I've learned my lesson now.
Well, what I've seen recently popping up is that now you can use these things more and more for essentials now, or things that traditionally, when I was growing up through my 20s, so over the last, well, over 67 years ago now, but you could finance whitewear and Harvey Norman and stuff like that. And to me, that made a bit more sense because they were big things that you couldn't maybe necessarily purchase. But now it's like, okay, you can, but even I remember, oh, you can now use this card at Countdown. And I'm like, whoa, that seems weird. But now it's almost like if that becomes normalized to put anything on buy now, pay later, where do we get to?
And it's almost like it's coming back to that, the circle of businesses finding ways to make money off people. Yeah, and that's because of this, you know, we know it's harmful. We know it's not helping people manage their finances. And we know that when you're not managing your finances, you know, your mental and your physical health is struggling, and then we've got these health stats. So, yeah.
Yeah. I guess it's tricky for businesses in New Zealand though, because if they don't allow people to use buy now, pay later, but you've got big marketing machines like some of the petrol stations and whatnot, like they're all, you know, doing their own marketing saying, hey, we now accept this.
Yeah.
And then you've got, you know, Sally trying to make a living, do whatever it is that she does in her business, and they go, no, we're against buy now, pay later. You can't use that. The consumer goes, oh, okay, that's cute. I'm going to Barry down the road who does. Yeah. And I've seen this a number of times with businesses.
No,
like
I don't think the business is to blame. I think it's the companies that are providing the product and the government for not legislating it properly. Yeah.
So changing tact a little bit, but on the buy now, pay later, because my worry is that if you let people use it for essentials, if we want to use that term, then that's where you see those social media articles where people go, what were they thinking? Why were they, you know, they shouldn't have it in the first place. But then there's two schools of thought, and one is, yep, like that's right, they should have had an emergency fund. And then the second is, if they're having to use their buy now, pay later for that, or whatever form of credit, they can't afford to be putting an emergency fund aside. And that goes back to your ladder. But I feel like this second narrative or story is more accepted and liked, and like, yeah, because, but that's, I think, when you live there, you're powerless.
Yeah, it's probably better that it's used for essential, not non-essential.
Yeah.
Because the essential stuff was going to have to be paid for sooner or later, but the non-essential is non-essential. I think it's a worry that it's being used for essential, because it shows they can't afford the essential stuff. Why can't they afford the essential stuff? Probably because they've got other debts that they're paying off.
Yeah.
Leah, that's why the whole enforcement of the affordable lending is so important for New Zealand.
One thing that I've seen you say is that one of your key messages is don't wait to ask for help. So say there are people listening to this conversation going, okay, this is a bit confronting for me. I'm probably pretty tempted to turn it off. I'm in that debt situation, or yes, I need to put any emergency on debt, or yes, I am using buy now, pay later for those things and rationalising that it's a good idea.
Yeah.
Like, to break that cycle for them, what do they need to start thinking about or maybe start doing?
Um,
They have to want to start with.
yeah, there needs to be a desire to have a different outcome to get a behaviour change because the behaviour change isn't always an easy thing because our caveman mind likes the same because that's safe. Doing something different is not safe to our caveman brain. So people that have grown up in poverty and never had any money, that's safe for them. That's what they're used to. And they get money, they can freak out. Like, that would be literally, okay, what am I going to do with this money? I'm sure I owe some people some money. You know, that money goes very quickly. And so I often say to clients that you've actually got to be comfortable with leaving money in your account and doing nothing with it.
Yeah. In a world where basically we're being marketed to hand it over.
Yes.
In our inbox, on social media, walking past anything, on the radio, basically everything is normally about, you've got our money, give it to us and we'll give you this in return.
Yes.
Yeah. Which is very hard to combat, where you're just getting bombarded like all the time. Like, you think,
especially if you're a spender personality. Yeah.
Which is, and then I think about the investment companies basically living in the same landscape, but having to try and educate and tell people, no, don't spend it, invest it for your future. And they almost have to try and outmarket the other type, which it's a big battle.
I think the investor companies are probably after people that have already got a lot of money.
Yeah. But I think there's a lot of education for people to start small and to build those habits.
Yeah, it's coming in. It's coming in with all the fintech, the sharesies that have started up in terms of the investment side of it.
Yeah.
And it is the more sexy side, I guess, of financial planning.
One thing that I think is really good that we don't talk about in terms of KiwiSaver is because we've now got a system in place to allow people to then save for their retirement. By default, you've now got millions of Kiwi people who get some form of education throughout the year from their provider saying, like recently it was, hey, we know the markets are volatile. So then naturally like the education level rises because people are involved in something like that. My danger when I look at buy now, pay later, and I don't use that, but I used to get bombarded when I did have forms of credit by these different sales and like the opposite, where instead of it teaching me something, it's about like, hey, 50% off for 4 days. It's afterpay day. Well, it's 4 days. Like, what do you mean day? But you know what I mean? So so with investing, it's okay, education, we're trying to teach you something. With credit, it's normally you've got access to more. Like, I get a letter saying, oh, okay, you can now access more credit. I'm like, I didn't do anything different. Like, why do they, like, what do they know about me to now give me a bigger limit? And then naturally like a monthly pamphlet with all the sales and the different places that I could now spend this. And I was just encouraged to like rinse through the credit.
Yeah, and that's where you've got to like want a different outcome. And often I say to my clients, do you want more things?
Yeah.
Do you need more things? Does that make you happy? Or would you rather spend your money on experiences?
Have people put time into thinking about that when you ask them that? Or is that a bit of a circuit breaker where they're like, oh, hang on, okay.
Yeah, so, I mean, it's hard because obviously for me, I'm not really interested in things or spending money. So it's for people, it's about looking at where do you get value from your spending dollar. Do you get value from going out to a restaurant for $50, or do you get value from going and buying a new top for $50, or do you get value catching up with your mates at the pub for $50? Or do you get value from giving that money to someone else to help them out? So it's where do you get the value? So when we're looking at changes in how people are spending their money, it's where do we think this is it going to be easiest for this client to make the changes?
How does one go about like learning more about that? That's just trial and error, spending some money, but actually asking yourself the question and being deliberate with therefore where you spend, or?
I guess knowing what your core values are in life,
Yeah.
what makes you happy. Like for me, I love being outdoors and doing adventures. You know, most of that's free.
Yeah.
It's kind of good. But yeah, so it's just like looking at what actually makes you happy and you know, it's you can get a sheet of paper which we have all different people's values, and it's about getting it down to your top 3 values and making sure those are being met. Otherwise, you're not going to be happy in life.
So a tactic that I have come up with, and tell me where I get this wrong, but I think this is a great solution, and I'm happy, like from what you see with people, tell me why this doesn't work. But I read that the average household has $1,400 worth of stuff in it that's basically like unused. And then I think that was from Trade Me. I think State Insurance did something around like the average household will have XYZ gym gear at their house. So for me, I think, okay, well, if that's not being used, sell all of that stuff on Trade Me, and then you basically pay your buy now, pay later, or you clear your credit and you give yourself a chance to basically
that is a quicker way of getting ahead. So I always say sell anything you don't use and you're not going to regret.
Okay, and you don't regret,
Yeah. So 2 questions. And the other one is cars. People love their cars.
Yeah.
But, you know, if you've got $15,000, $20,000 held in a car, you could potentially downgrade that to a $5,000 car, and then you've released that money to pay off debt. You're then getting, you know, whatever the percentage of your debt is as your return.
Yeah.
Versus a car, which is depreciating every year. Yeah.
So am I being too rational with that as a solution though? Like that probably only makes sense to people who actually really want to make a change, right?
Yeah. If you're serious, you know, or things are really tight, you know, start selling things. I mean, it is a bit of a rigmarole, you know, all the communication you got to do and everything, but it's definitely a way of.
But then the behaviour change would be unsubscribe and actually, because someone said to me the other day, I've got 2 buy now, pay later accounts, but I don't use them. And I'm like, well, then why do you have them? And they kind of jokingly said, well, I just haven't looked into how to close them down.
Yeah.
So again, like it's not rational, right? Like why do we then have them for 2 years? And I was a little bit the same when I finally paid off my final credit. It wasn't a credit card, but like access to credit that I could use. And I'm like, I'm just going to leave it there. It doesn't cost me anything, but there would be 12 emails a year with a new sale or whatever. And so I'm like, okay, to really break the cycle, I need to clear it, tell them I don't want this anymore, and I unsubscribe from all that shit to change the behavior.
I mean, if you're a spender personality, yeah, because there's also, you know, lines of credit, you know, credit cards, overdrafts, they are there as emergencies, for emergencies. And if you're going into it depends where we are in the economy. You know, if you're going into an economy that we've been in, which is high risk, then you want to keep all your lines of credit open because you don't know what's going to happen.
Yeah.
But if the temptation is too much, then you cut it.
Is it possible to change money personalities, or do we normally sort of stay?
No, so it is your natural money personality you're born with. So what it's about is using tools and tactics for it and taking the good parts of the money personality so that, you know, a spender is enjoying the now and having fun. There's nothing wrong with that. That's the good part of the personality. But also you might have a partner that's different, and then you can use the yin and the yang of the personalities, and they are, you know, the hoarder is reining in the spender, but the spender's getting the hoarder to have more fun.
Yeah, okay.
So it's balancing it out.
Yeah, I found that through my life as I went from probably spender and overspending and using debt but knowing better, but wanting to kind of invest and hoard and do things like that. But I gradually broke that cycle and started the hoarder piece, and then you realise it's actually quite boring. Because basically each pay you invest or you hoard, and then you're like, okay, like you wait till the next payday. And I can see why that's really not that fun for people. Because,
but it is if you're a hoarder.
Well, yeah, I'm like,
saving up all this money. I just got this deal.
Yeah.
I just got this free thing from the side of the road. I'm so happy.
Yeah. So, yeah, I'm probably going to go through it and figure out, okay, what do I come out as? But
yeah, I'm interested to know what your money personality is now.
Yeah. But then I'll have times where I'm like, okay, I'm definitely going to like splurge on this or whatnot. But I think I used to do that, but do it on credit and get myself into trouble. Whereas now I will, make sure everything's done properly first and then, play around or whatnot. But I do maybe one of the first things that I teach with Keep the Change is take a business lesson into personal, and that's a business has to track their financial position.
Yeah.
And they've got to report on that, and the bank are going to ask an individual for that when you go for debt. So then why not track your financial position every month to get closer to it, so you can look at your assets, your liabilities, what's coming in, what's going out, and that probably makes a lot of sense to a hoarder or a risk taker, etc. Whereas for somebody else, they're probably like, dude, I just want to drill through everything I've got.
Yeah, well, I think it's getting that, realising and learning that lesson that the debt's not helping you because of you going backwards.
Yeah.
Like if you're getting more debt, your net worth is going backwards. And it's realising you've got to do that savings, have that savings habit, so you don't have to get the debt. And then it's like I said before, it's being comfortable with having money without feeling need to do anything with it. And then it's looking at the investing. And it's about having a goal to motivate you. A spender isn't going to just do it for the hell of it.
Yeah.
They've got to have a motivating goal. Travel is a very motivating goal. I mean, the spender personalities will save for travel, holidays. Yeah, so they can do it. Yeah.
Okay, so we can't, because I got frustrated. I think I knew my personality wasn't like that, and I got frustrated by the fact that I kept doing that shit. And I think that was part of my catalyst to be like, come on, mate, like, you need to tidy this up because it's just going to carry on. And so then I went off on the path of like really leaning into what was more fulfilling or where I found value in spending my money. Yeah. And I think we all think that we're just going to do that at 18 or 19 or whatever, but it can take, I was late 20s for me before I'm like, right, like, what am I doing?
Yeah, well, I think if you can learn your lessons in your 20s and get your shit sorted by your 30s, you're going to be all right. If you can do really well with your finances in your 20s, you'll probably be retired in your 40s. But if you get it sorted by 30, then you'll be all right. So if you can learn your lessons, like we used to see a lot more hardship clients before Money Talks got branded. And I would say you've learned your lesson now. That debt is just, it's a ball and train around your leg, and it's going to hold you back.
Yeah.
So you just got to realise that with your decision making. Yeah.
I saw from an old article that you were a part of talking about how the sooner you ask for help, the better. But even for families, when it comes to mortgages as well, they'll wait too long to talk to their bank, as an example, and by then they're limiting their options. So what advice for people who might be struggling with mortgages, or it probably goes back to right at the start where you're talking about if you can start seeing redundancy coming, but for families with mortgage debt, anything specific they need to be thinking about, or even just talking to your bank, like what do you do?
Well, it depends on your situation. So it's probably small businesses, like they can dig themselves in big holes because they're getting behind on their tax. They've still got to keep up with the current tax, which they obviously wasn't doing.
Yeah.
So, and then the tax isn't due to another year later and blah, blah, blah. So they can dig very big holes. So definitely, if you're not being able to keep up with your tax, and because you just get yourself in a bigger hole, and sometimes we can't get people out of that hole, and they have to look at bankruptcy. So it's just like the sooner you get help, the sooner we can get you moving on a better trajectory.
What about mortgagee sales? Have you seen anyone go through that process?
Yes, back in the last GFC. I think there's a lot more available these days in terms of the hardship ability. You've got Kiwi Saver now as a backup, so it's not what it was.
On that, if we didn't have Kiwi Saver through this last economic downturn, like how do you think we'd have a lot more carnage out there? Because there are a lot of hardship withdrawals now, eh?
Yeah, yeah. But the thing is, the people that, they bought their first home at the peak, so they used a lot of their KiwiSaver from there. But if they're earning good money, it builds up pretty quickly. I mean, the biggest thing is relationship breakups. That's why the riskiest thing you can do is buy a house with someone that, it isn't that you haven't been seeing for that long.
Yeah.
Yeah.
I saw someone the other day, and this kind of ties together a lot of what you're talking about, but they said to me that they're, living paycheck to paycheck, struggling as a household. They aren't prioritising some of the health for themselves, but are for their children. They get by, like you could tell they're really trying and they're giving it a good crack. And then they mentioned then they're topping up 2 rental properties as well. And I kind of thought, again, like accounting, trying to be rational, I'm like, why do you have 2 rental properties in a season like this? And I actually asked them, I said, hey, like help me understand, why do you have 2 rental properties? Like wouldn't you analyse the whole situation, clear one of those or look at what levers you have and then, but what's happening there?
Well, because you're selling in a down market, so you're depends how long they've had it. You don't want to sell in a down market if you can avoid it. So it's if you can get through it. And we are seeing people in hardship because they've got a rental property. Yeah, because you can't, the hardship avenues are available for consumers, not investments.
Yeah.
Yeah.
And that probably goes back to, I was going to say before with car finance, often people will say to me, they might have brought a nice car and beyond what they really need, but the argument why they can't downsize is because the car now isn't worth what the loan is. So then they feel effectively like they're trapped.
Yes. Yeah.
But that's not going to change though. It's not like the car's suddenly going to go up in value either.
No, not the car, but the property could. Yeah. It is often in that situation you need to make a decision. Can you get through this?
Yeah.
Or you better to sell now before prices drop more.
Which would be very hard for people because from what I've learned, people don't like to let go of things because, then we're
locking the losses.
Yeah.
I mean, there's a lot of people in Wellington in this situation. The property prices have dropped a lot down there.
Yeah.
And obviously with the job losses as well, that has a big flow-on effect to everything else.
Yeah. Finally, before we wrap up, what if we haven't covered any sort of basics or tips that you would like people to understand?
Yeah.
What would they be to be thinking about no matter what their situation is?
Just have a look at my notes here. We already talked about paying the debt down and not having that savings first. I think a lot of people also put a lot of shoulds on themselves and pressures around money, which then means it's hard to make rational decisions when you've got this pressure on your brain to make the right decision and things like that. So we see a lot of that. We also see a lot of, for retirement, there's a lot of scaremongering out there about how much you need for retirement, and it scares people and they just put their head in the sand.
Yeah.
So, people putting their head in the sand about things.
Just on that, I noticed that for the last 2 years there's been content around how you'll need $1 million when you get to retirement, and then this year, I think, when the data came back out, it was basically the narrative had completely changed. And it was
that might have been because of me.
Really? I was like, something has changed here and I found the old articles, their titles, like what it was talking about. And then this year I'm like, it was all like toned down and basically that you wouldn't. But if you read the article, it still did have very high figures of what you'd need. And the numbers were now higher for a comfortable life. But the whole tone of it was completely different.
Yeah, I did contact them last year and I said, you're scaremongering people. You've got to stop doing it. They're like, but we need to do it.
Yeah.
I'm like, no, because people just put their head in the sand, they freak out, they give up. Like, I can't do it anyway, so why should I even try?
Yeah, interesting.
And this is the difference of seeing someone independent, because we're looking at the facts of the situation, the numbers, and we're coming out with real figures, not projected figures based on assumptions to try and scare you into investing your money to make more money to make sure you've got enough.
Yeah. Okay, so if people need to get help not just from you guys, but I think there's so many services and offerings out there for people to get started, but we don't know that they exist. So you mentioned Money Talks before. Anything else that people probably don't know?
Yeah, so Money Talks is the 0800 number where you can then go and see your local financial mentor, which was the government-funded budget advisors. So if you're in a hardship position where you're on the benefit or you're not earning much and you've got these loans, they can help you negotiate with those lenders and get you out of that situation. So then, and you can come and see financial coaches, and you can access that funding through EAP, which means you won't be paying for it. And the thing is, if you can't access it, your partner might be able to access it, or there might be another family member's entitlement that you can use as well.
Yeah.
So that's just that's a win-win situation.
Yeah.
And then also you can pay for services privately, but there isn't many of us out there, and it's because it's quite a difficult business model, and we would love to have support to get our name out there more.
So some of your role will be, and your business will be EAP, and then you do private financial coaching as well. But naturally, probably a lot of people can't see the value in paying for that or can't afford to, etc. So they probably then, the market's not very big for that, right?
Yeah, but I mean, it is a bit of a no-brainer.
Yeah.
Investing that money that is going to have a payoff for the rest of your life.
Yeah.
So
I think as Kiwis, we don't like doing that too, though, because it's just not like the done thing. Even in Next Advisory, my accounting practice, you can help people, but a lot of them want it for free or just want a quick phone call with all the answers. But half the time, I'm like, you're not taking any notes. But there's people who really then do invest their money into it, and then you see they take it so much more seriously and actually make sure that they get a benefit from the information and the education. But I do feel like we're a nation of why should I have to pay for advice? But we don't go to the doctor and be like, don't I have this medical issue? And then they give us the actual answer and go, oh, well, you don't have to pay for that because you're a Kiwi. Or, of course there's subsidies and stuff, but it's weird how with financial education and stuff, we've got this big begrudging, why should I have to put my own money up? And I wonder if part of it's free schooling, and then uni feels free for a lot of younger people because you're paying back your loan.
I mean, when you see a financial advisor, you're not paying for that. They're paid commissions, and they get big commissions, thousands of dollars. So, they're not used to paying for it. I think there's also a lot of shame, and they've got to share everything, embarrassment. So there's a few factors that are going on there. But I mean, at the end of the day, what we're doing is we're streamlining the process.
Nice.
Like, you could do this yourself, and it could take ages, and you don't get it right. But we're just streamlining that process and making it a lot easier for you to do. Yeah.
So you've got people all over the country that help in these situations?
We're mostly working remotely.
Okay, cool.
So that keeps our costs down. So one of our ethos is to keep our fees affordable so people can see us. So, yeah.
So if people want to find that, they can search yourself or Full Balance Financial Coaching. I'll chuck the website into the show notes as well so people can find it. But, I guess, how much comfort do you see in even the EAP piece when people do finally reach out and have that conversation? Because I've had a few of those in my life where I'm like, man, I wish I had that conversation sooner. Or, you're worried about all this stuff, then you finally have a call with an expert or someone that's knowledgeable, and you realise that this problem that you thought was this big is actually like this, and now you've got some actionable steps and you can stop worrying about it and start doing.
Oh, yeah, it's a weight off their shoulder.
Yeah.
When they've given us all the information,
Is that the fulfilling part for you, doing this, and that's kept you in the game for so long?
I mean, I love numbers.
Yeah.
I think the end result, I mean, we want to do some more longitudinal research and see how it's going over the long term for people. We definitely know we're getting results in the short term. Yeah.
Cool.
Yeah.
Well, thank you for joining us, and we've ripped through an hour very, very quickly there. We probably could talk for another hour, so we'll have to catch back up again in the future. But thank you for all the work that you're doing out there with people, and there's a lot of, often you're asked to speak by the media and different interviews and stuff like that. So I'm sure if people search your name, they'll find different opinions that you've got on things.
Yeah.
And keep up the good work, and no doubt we'll catch up in the future.
Yeah. And there's the Facebook group as well that I've got as well, when we put relative stuff on there too.
What's that called if people want to find it?
That's called financial support, and then it's cost of living at the moment. We kind of tend to change it depending what's going on. Like we had COVID, we started at COVID, and then with the floods and different things that are happening that affect people's finances,
Well, there's always something happening. You can leave us with a gem. What's one piece of action all of us can take to improve our own financial literacy or financial outcomes?
Oh, one piece.
What's one thing we can do? What's your gold nugget?
Oh, I'm not sure. I think the next generation, your kids,
help them.
teaching them a saving ethic and a work ethic. Yeah.
Saving ethic and a work ethic.
Yeah.
Oh, they probably need another hour on how we do that.
Yeah.
Yeah. Nice. Well, we'll have to come back for part 2 at some stage and do that. But yeah, thanks again.
Okay, great. No worries.